Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today, I'm going to talk a little bit about the big trend. Someone was asking me, and I'm going to show you here with a chart. This is the SM Energy chart, and you can find it on some of the other charts as well. If I were to zoom in on the chart here, I'm looking zoomed in. This is daily candlesticks on a 1-year time frame. So on a 1-year time frame, we're having a pullback in SM Energy. And it could pull back further than where we are today. You can extend this thing out and say that the trend line is broken. And a lot of people will say, well, the trend line's broken, I should sell and run away. And I said, hey, look, the trend is still intact. And I think it may confuse people what I mean by the trend is still intact. I'm looking at things from a different time frame perspective. This here is a short-term time frame, and we could pull back and we could have a consolidation period, or maybe not. Maybe this does rip it higher. I try not to predict the immediate near-term future. What I try to do is I position for the big trend. What is the big trend? And what is driving SM Energy to go up? In the short term, they could go down, just like a lot of these other companies that are selling off here in the short term. We're hitting, the bottom of their support levels. Other companies look very solid, like Crew Energy is looking very solid for a potential move higher. So we've got this split or mixed area in this sector. The companies are kind of split. So on the short term, someone would say, well, the trend line's broken. We should be selling out. We should be ejecting, whatever it is. But this is the big trend. And this is a post that I'm sharing. This is part of the silver membership, and the platinum membership can also view it. So I'm sharing one thing that I have on the channel. It's called the S-curve energy consumption. And as nations become more wealthy, they tend to use more energy per capita. And what I have here is the per capita energy consumption for different countries. And you can see this S curve. It comes down, it comes up, and then it S's. In America, we are using around 8 or 9, I think this is barrels, TOE per person. So you can see that we are using far more energy than everyone else. And here's some of the other S curves over time of other civilized, first world countries. And what we're going through is we're going through urbanization in different countries. Like India and China are still going through what's called their S curves and increasing their energy use on a per capita oil consumption basis dramatically. And they're gonna reach levels much closer to where the advanced nations are. So when I'm talking about the big trend, the big trend, that is the big trend. The S-curve and the adoption of more energy use in third world countries or other countries that are going to be ramping their energy consumption. And that's the majority of the world. The majority of the world is hitting their steepest part of their S-curve of adoption of more energy use. That is the big trend. That is the big trend. So looking at the short term, I'm not looking necessarily at that. What I would do for the short term is looking at that as a buying opportunity. Why? Because we have underinvested in energy, in oil particularly, and natural gas, and anything that's fossil fuel related. If you're at the same time ramping everything up in the middle of their S curves in terms of energy consumption, I don't think that we can. I don't think there's a single chance. I'll go out on the limb. Okay, I'll go out on the limb and tell you what my honest opinions are. I don't think there's a single chance in this world that renewables could offset this energy consumption. There's no way. Why? We can't even put everyone. If everyone adopted solar today and said, "Hey, let's go throw up solar on our roofs," we couldn't do it. We don't have enough silver. And that's just in America. We're talking worldwide. We can adopt absolutely everything, and I think we're still short. And this is people that are just getting a taste a taste of being a little bit wealthier. Do you think they want to become wealthier? Oh, yes, they do. Oh, yes, they do. They want to be sitting in their basements creating YouTube videos just like I am. And just like you're sitting on whatever device that you have watching this. They want to do the same thing. They're in the middle of their S-curve. That's the big trend. That's what I'm looking at. And the trends are still intact if you were to look at the inventory levels. We are drawing down inventory levels. The trend is intact. The short-term noise, this short-term noise that we're seeing in these companies pulling back, that's just a short-term pullback between summer driving season and springtime. That's all this is, in my opinion. Now, could this fall a little bit further? Yes, we could even get stability right where it's at, and we could launch higher from where it's at. Again, I'm slow in my movements. I used to be very fast, and right now I'm very slow. I'm looking for the market to get, turn this momentum around. So I'm waiting to buy in my favorite companies. Am I going to buy a bunch of energy? I already own a bunch. I already own a lot for this trend or this movement. And that's why I'm so heavily focused in energy, because I think we have problems in energy, and everything stems from the energy problem. Fertilizer problems, food problems, it goes on and on and on and on. It's all derived from the energy shortages and the cost of energy. It's all derived from there. So I'd rather go to the root of the problem and invest in the root of the problem where it's needed the most and where I think the biggest gains potentially could happen. And if we're going to an electricity fueled world, that just means that uranium is going to be a good bet. But be careful on your time frames. Be careful. And if you guys can't hold through, these pullbacks, you either one have to get better at holding through the pullbacks, or educate yourself more on the big trend, or look and keep staring at the big trend, not necessarily the day-to-day movements. But if you literally can't get through these pullbacks, then you probably shouldn't be in the market at all. Because we're always going to have these pullbacks. They always exist. They always have sell-offs. And that's just a part of the markets. But to me, this is a huge buying opportunity in anything commodity related. And I saw some other comments. They're talking about, well, your thesis is like this huge housing boom. That's not the thesis. The thesis is the rotation of money and where to be given certain market cycles. What you're arguing is that we are further along in the cycle than what we really are. I don't think so. I don't think so. Why? I know it's good to talk about this. We are still early in this cycle, and that's how we have increasing home prices going up so much. And I don't know how. I don't know how to. It's not really explained because I've already explained it. I don't know how other people can grasp it. When you look at a curve, and I don't know if you guys know like bell curves and whatnot, and you start looking at things, the largest imbalance is where you go from a recovery phase to an expansion phase. What you do is you draw down all the inventories to basically nothing. And what we're at today is in that spot right now. And the reason you don't have to be an expert to this. You just have to kind of have a little bit of logical thinking. That's it, just a little bit. You'd say, okay, the biggest price increases is in the beginning of the market, because that is where you have the largest imbalance of demand of buyers and sellers, right when the inventory runs out. That's exactly where we're at. Now, if you looked at history, the mortgage rates didn't stop this trend. And this is another trend. What you want to be if you're an investor is you want to identify the biggest trends that are out there, the biggest trends, and the ones that impact the investments the most. So what are the biggest trends, and what are the ones that are going to impact the investments the most? We have a millennial group that's coming up, and that millennial group is in home buying years. It's a larger demographic than the baby boomers. Gen X, Y, and Z combined are much larger than the baby boomers. And what you want to do is you want to identify the trend. You want to see how that trend is doing by looking at inventory levels. Then you can monitor the inventory levels to see if that trend is having an impact. this is how you should approach it and how you should think. So you look at it and you say, okay, how do I verify that this trend is in place? Well, you look at inventory levels. Now, if we don't have any inventory, I don't want people to automatically just shoot over and say, oh, well, people could die. The baby boomers are getting old. A whole bunch of homes can come on. That's all speculative, guys, like massively. And the markets don't move that fast. You just look at inventories and watch what they do, and then respond accordingly. Watch at how housing starts, see what they do. And it's going to take years for this to materialize. It's a slow moving market. And look at oil inventories. What are they doing? And if the inventories are still low and there's people that are scared in the market by demand problems, like, for instance, like we have today, people are scared because we have lockdowns in China. We have lockdowns in whatever, right? Is that permanent or temporary? If the answer is it's temporary, then this is all a buying opportunity. We are in the middle of the S-curve, the big trend's still intact, and that we have short-term demand fluctuations. This isn't a long-term problem. And have we fixed the demand side? No. Our inventory is still declining. Yes. It's all intact. It's all intact. It is all intact. So it's about identifying the big trends and then monitoring what you should be monitoring to ensure that the trends are still intact. That's it. That's how you think and are supposed to look at the markets. So this breaking to the downside here, I'm not too worried. Why? Because the trend's still intact. How is the trend still intact? We have larger deficits eating through inventory. We have short-term bearish stuff coming out, which is temporary. And nothing's been permanently fixed. The trend's still intact, in my opinion. And I think it's going to get worse, not better. So I'm going to sit tight and I'm going to accumulate shares where needed, where I want, where I think the biggest opportunities are. Where are the biggest opportunities? Sign up to Finding Value, Finding Value website, a platinum member, and we'll go over it every single weekend. I can go over a lot of these things with everybody, and that can answer your questions. But I wanted to answer this because a lot of people get afraid because of the price movements. The price movements have nothing to do with the trend. They are separate entities, separate. Prices are over here, and yes, we should use them, and they are inputs, and the prices are never wrong. I agree with that. But it doesn't mean that the trends are not in place anymore. You can have temporary pullbacks with temporary things, but if they're not permanently fixed, it just means that they're going to go up again. It just means it's a buying opportunity. And what we're trying to train ourselves to do is to, one, watch the trends, monitor the trends, and then use technical analysis to add into our positions when they're down. And that's how I'm monitoring all this stuff, and that's what I'm doing. So hopefully you've gathered something from this clip. Hopefully you can come out a stronger investor from this information on what to look for and how to monitor things. Inventory is where it's at, guys. That's how you monitor things. And it has to be a trend, not a temporary blip. And you have to accurately read data. I'm sorry, but so many people that I see cannot read and interpret data. They can't do it. So be careful who you listen to. When someone says inventory is up 100%, someone's going to be like, oh my goodness, inventory is up 100%. It's totally a bubble. And then you look at the actual overall inventory level, and it's like, went from 0.1 months to 0.2 months. I'm like, dude, you have no inventory. This is going rocketing higher. So the way that you set things up should be in absolute terms. You should see months of inventory. You don't use percentages. Percentages is garbage, and they're trying to manipulate you. Don't be manipulated. I don't like the manipulation stuff. We've never had a down year in housing with inventory below 6 months. We are at 2 months. What is your analysis if we're at 2 months and we've never had a down year under 6 months of inventory? Well, we're going to have an up year. How much? I don't know. But the chance of going down is pretty much nil if we've never had a down year under 6 months of inventory. So you have to know history, you have to know data, you have to look at this stuff, and then what you do is you draw conclusions from the market of what's going on. And in my opinion, the trend is still intact. All right, guys, give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, Platinum membership. I'll keep you guys' heads on right. We talk about opportunities in all these different stocks. Obviously, there's a couple of my favorites. If you're on the website, you know which ones they are in the energy sector. You could probably name 3 right off the top of my head, and everyone would be like, yep, those are the ones that he likes. There's also other opportunities across a whole bunch of different sectors. And remember, when you're buying early in sectors, when they're way down, we're going to have to ride through a lot of ups and downs, lots of volatility until the trend is firmly in place. But what we're looking for are downtrends that are broken. We're going sideways momentum, and they're about to head higher. The inflection point is what I call it, where things start to invert and move up. So that's what I've got for today, guys. We'll catch you next time. This is Finding Value.